Jonathan joining us momentarily. This is our developer AMA for anybody and everybody building on quainetwork. This is a place you can come to ask questions, get answers, chat with the core engineering team over here at quainetwork. I've been hosting some live streams almost every Tuesday and Thursday. It's been pretty busy past few weeks, but I can feel the questions on that. Looks like we got Jonathan in the audience here. Let's invite him to speak. But if you guys have any questions, feel free to drop them in chat. I see a number of emojis down there. Happy Monday, guys. Happy Monday. Looks like we got Jonathan up. Can you hear us all right, Jonathan?
Hey guys, can you hear me?
Yeah, got you loud and clear. Rock on. Rock
Awesome.
on. Happy Monday, Jonathan. Hope you had a good holiday weekend. How was your weekend, man?
Yeah, it was good. The University of Texas beat A&M. That was pretty big.
There we go.
I went to the game in football. Went to the game. It was a good game. Visited some relatives up north and back in Austin. So yeah, it was a good Thanksgiving holiday. And I know you guys requested Shakara Game of Pointers to speak. He's just not able to now. He's working pretty hard on soap stuff, so won't be able to make it. But possibly next week, if we're able to get everything on testnet and it's all running smoothly, he might be able to hop on Monday of next week. Just wasn't able to make it today.
Yeah, appreciate that, Jonathan. Shout out to the community asking for Shakara. Appreciate everybody wanting to hear from all the engineers. Obviously, we got Jonathan today, smart contract wizard, core protocol engineer, so he can answer a lot of questions. And then again, guys, we also do an AMA with Dr. K every Wednesday. So plenty of opportunities for you guys to engage with the team. Congrats on UT Austin winning. Not a huge football. I need to become a football fan. But I had
If you get a team to root for, it becomes a great thing. As long as they don't suck. If the team that you root for sucks, that's tough,
right. Yeah, hockey fan over here, and so I'll just say my weekend was great because we're smoking it, we're killing it. Colorado Avalanche all the way, guys. Going to the Cup this year.
Colorado?
Yeah, we're putting it on them, man. It's been something to watch. So if you have a winning team, sports are a lot of fun.
Yeah, if you got a losing team, it's kind of tough. Actually, when I was a student at the University of Texas, we were a losing team, and I still went to some of the games, but I was never like a huge fan, because it's hard, man. It's hard being a really big fan of a team that's just losing all the time. So when I was a student, I mean, I was busy with, engineering work and all that, research. So I didn't have a lot of time, but I did go to some of the games, and we would lose I guess half the games that I went to we probably lost, and then the other half we barely won. So it was tough.
Brutal. Well, happy Monday. We got everybody here in chat. For those of you tuning in on X, we are simulcasting from Discord. It looks like the tweet is pinned up above now. So if you want to join us over in Discord, feel free to check that pinned tweet. The chat's always fun. Keyshore's chiming in here. He says, his team won their cricket match. So congrats to you. It's a good weekend of sports.
Wow, everyone's winning. All right.
Heck yeah. Congrats.
Everyone's winning. Wow.
Right. Anywho, but yeah, guys, if you have any questions for Jonathan or myself, feel free to drop them in chat over in Discord. And if you're tuning in here on X, feel free to drop a comment here as well. We usually get to those in the back half of this. So if you can't make it over to Discord, feel free to drop a comment here on X and we'll get to it. But we got a few questions dive into. You ready, Jonathan?
Yeah, let's get to it.
Let's go. Okay. Lone Wolf from Keyshore is asking, what is conversion flow amount? How is it related to exchange rate? I see conversion flow amount was at least 97% constant at one point. Oh, he's looking at a little chart here. I gotta click this. It's an interesting chart.
It's a cool chart.
Yeah, I haven't seen this
I
before.
would be very interested to know where he got it, if he made it. I mean, that's pretty cool. Maybe he made it. I mean, if you made it, open source it. You know, that's a cool thing you got going on there. Yeah, so conversion flow amount is just the volume of conversions. That's all it is. So it's mostly constant because, you know, not a lot of people are doing conversions. Once you see people, you know, doing conversions regularly, that number will vary, you know, at a higher frequency. Right now, it doesn't vary very much because not many people are submitting conversions. You really want to see, I guess, bots coming online and doing those conversions autonomously or automatically. That's how you would see a volume that is constant or consistent. That will happen as soon as QI, you know, gets a real value listing. So, like, if it's listed on an exchange traded against USDT, for example, you'd probably see a lot more volume from arbitrage bots trying to bring it back to par or to parity with QUAI. So I think that will just take some time for us to get there. But, you know, right now it's going to be low variance, low volume, and it is not related to exchange rate. Those are separate variables. Exchange rate is the, you know, rate of QUAI to QI, or QI to QUAI, depending on how you use it. And there's APIs on the node that use exchange rate, but that you can query to get, you know, how many QUAI per QI, how many QI per QUAI at the current block. And that uses the exchange rate. Another word for exchange rate is QUAI. Those are very similar parameters.
Got it. Wow, detailed answer there. So a little bit of extra context here. Kishore is aware that this is just VS Code with Data Wrangler add-on, and data was collected from RPC QUAI get block by number method. And he mentions, I believe that's Lone Wolf, will be open sourcing this in the future. So shout out builders on quainetwork. Love to see it. Dang.
Yeah, awesome.
Absolutely.
Open source it, please.
Absolutely. Yeah, the more the merrier. There's lots of perspectives and angles people can dive in here. It's plenty of opportunities to build. So shout out Lone Wolf. Kishore's sharing another chart here. And Lone Wolf said he made this plot on arbitrage opportunity based on exchange rate and conversion flow amount. He hopes this helps and was thinking, apart from the historic trend, what else can we leverage this graph for? So not sure if you can see the graph. Obviously X can't see it, guys. Got to tap into Discord. This is where it's at. But we have, for those listening in, we have a scatter plot of exchange rate versus conversion flow amount. Color, there's a color gradient here for arbitrage score. That's pretty cool. And then another daily time series, daily max arbitrage opportunity score. So he's scatter plotting exchange rate versus conversion flow amount and color coding arbitrage score. And then in the second chart, he's got a line that plots his arbitrage score. It looks like over time. So this is really interesting, actually. I'd be curious how he's scoring arbitrage opportunities, but
Yeah, I don't know what that means exactly, but I presume that when the arbitrage score goes up, that means that it's more favorable to convert, maybe because the slippage is lower or the rate is higher. You would see the rate go. It lands. You know, that exchange rate at the next prime block will adjust, and you might get a more favorable rate potentially.
yeah, good call out. I'm very curious, Lone Wolf, how you generate your arbitrage score there. And I'm wondering, there's effectively two strategies, right, Jonathan? There's like QUAI to QI, sell QI back for QUAI, and then there's like the inverse of that effectively, right?
Yeah.
Yeah. Okay. Wonder if he's calculating both directions there, or considering both directions. Interesting.
Yeah, I'm not sure.
Interesting stuff, guys. Love to see all the builders diving in here. Lots of opportunities. This is one of many. We call him out all the time on these calls, but mad respect to Lone Wolf. Guys, give Lone Wolf a round of applause for setting this up. That's for sure. Good stuff, man. Yeah, looking forward to open sourcing, seeing the open source version of that. Rock on. All right, let's see here. Gabriel, I see you've raised your hand to speak. If you could just let us know how many questions you got. I see a number of them coming through here. I'm going to move on to this next one real quick. North Logic is asking, he says, so let's say APR is 1,500% for the first day of staking. This is SOAP staking. The actual returns are calculated with whatever APR is divided by 365, question mark. Maybe you can work through, maybe we could talk through some of the staking mechanics and how APR is actually realized, Jonathan. I think that might help.
Yeah, it's I mean the number that's going to be shown is just going to be an estimate because it varies. It varies. It's not fixed. So you'd even get kind of like a variable interest rate or a variable. I guess a variable interest rate is probably the best way to describe it because sometimes when you get a loan, right, your interest rate will vary depending on what the Federal Reserve decides to set interest rates to. So most mortgages are fixed interest rates. But for example, the government's loans are variable. So the government loans will increase, the interest payments will increase when the interest rate goes up and will decrease when the interest rates go down. So it's variable. So it's kind of the same thing. So you can kind of give an estimate as to what the APR will be, right, 365 days from now, like that's how much you're going to get. But it varies, right? It's going to vary depending on how much is staked and how much income is coming in from the subsidy chains. So we can give you an estimate, but that's going to change. So it's like, it'll say 1,500%. Are you going to get 1,500% on your money a year from now? It's impossible to know. But we do know that is what you're getting, at the current moment. And if you want to get it if you want to divide it by 365, that'll give you the day APR. So like that's a little bit more, I guess, accurate, I would say, right? Because it's less variable intraday. It still could be, to be clear. But if you divide the 1,500% or whatever it says by 365, I think you're going to get probably a more accurate number on a day-to-day basis than the yearly one. But because everybody already expects a yearly APY, that's what we're going to put down, right? If you ever put in money in a staking or yield-bearing instrument, DeFi instrument, you're always going to see a yearly APY, even if it's variable. So that's just what we're going to stick with. But if you wanted to get a more accurate number, maybe a daily APY would make more sense.
Yeah. Yeah, that helps a lot. Yeah, definitely. If you want to see your daily, divide your current estimated APR by 365. Yeah, just I don't think I've ever seen a DPR number. I'll just say that out loud. A daily percentage rate.
Yeah.
Cool. Great questions, guys. Noah's got one, and then we'll dive into some clarification that Noah's seeking with the exchange rate as well. So let's bring Gabriel up. How you doing, Gabriel? Here we go.
Good. I'm doing well. My question was about about SOAP and mining chi with SOAP, and Dr. K tried to explain this last week, and I didn't even know what questions to ask. So I'm just trying to get through understanding up until without SOAP, and also just underneath SOAP, because I believe SOAP is just additive, so it's not dependent on it. We have the way that chi is mined is makes perfect sense. It's just proportional to hash. Aside from the halving or whatever every 2.5 years to account for increases in hash efficiency, it's basically just proportional, and that stops after 2030 anyway. So with the way that if you are going to mine chi, it's SOAP. I'm just having trouble understanding from when I first hear that, my intuition is that's going to mess up the peg to energy because now you're saying that there are these three other hashes that have varying degrees of efficiency. Dr. K explained last Wednesday, and I didn't really fully understand this reasoning steps. He said that like the market would just price it out anyway, so it would kind of end up pricing correctly. And I'm just like having trouble understanding the exact mechanism of that. Like maybe it, or like I think basically it comes down to I still just don't fully understand exactly what SOAP is doing. Like we have three, like we're gonna start out with these. There's 9 total workshares, and then there's 333 for script, Compow, and Shaw 256, and but I just like I'm not quite understanding, like particularly with Chi, which is like a very like Chi is supposed to be kind of like this very objective. It's tied to hash, it's tied to energy, and I'm like having trouble understanding how you could like mine Chi with SOAP without it like somehow messing up like the energy peg or like the hash peg.
Yeah, good question. Luckily, the answer is pretty simple. So there's a number of hashes per chi in Kapow, and we've estimated that based on GPU efficiency currently, and obviously we have a formula to normalize it over time or to make up for efficiency gains in GPU hash rate or GPU efficiency. And so you could do the same thing for any other algorithm. So for SHA, for scripts, we have separate numbers, and those numbers are many times larger because, we can just make a normalization, right? How many units of energy does it take to make one Kapow hash? Now, how many units of energy does it take to make one SHA hash? It's actually much less. It's many orders of magnitude less. How many units of energy does it take to make one script hash, right? That is, several orders of magnitude less units of energy per hash than in Kapow. So we just have different numbers, and those numbers will also, change over time, just like the Kapow one does, or prog power, whatever you want to call it. Right now we have one variable. It's QUAI QI, and it is something like I want to say 10 trillion hashes. I want to say is right now. And I might be wrong. Obviously it's variable.
Yeah,
Sorry, what was that?
that's right. I think it's like 10.4, 10.6 or something around there. But yeah, basically,
cool. Yeah. So if Kapow, is 10 something trillion, then we would say for SHA, okay, now it's probably, 1,000 trillion, which is, I think, a petahash or something like that. I mean, I can't say that's the exact number that we set, but it's something like that. So basically,
there was an aspect of like hard coding where you guys kind of looked at the current technology and just did some calculations on specifically like the energy usage. But so there is kind of like a hard coding aspect to this. Is that correct?
To begin with, yeah. To begin with, just like there was a hard coding for Kapow, there's going to be a hard coding for SHA for all the algorithms. I mean, they all have different numbers because they all have different efficiencies. SHA ASICs are much more efficient than Kapow for GPUs. A Kapow ASIC would be a little bit more efficient, but not much more efficient. So it's not super important to consider that. But if it ever does happen that somebody constructs a Kapow ASIC that is an order of magnitude more efficient than a GPU, we'd obviously have to change those numbers. But we don't anticipate that happening just because the algorithm appears to be like actually resistant to this ASIC design. But SHA and script obviously are not, and so SHA and script have ASICs, and so we have to set separate numbers for those hash algorithms. But yeah, I mean it's pretty much a hard coding, and then what happens is over time, we make it so that it's more difficult to find one shear, or it requires more hashes because we expect the efficiency to go up. So right now, you can actually get an ASIC that does, I think it's one petahash per second, actually, or something like that. Maybe it's not one petahash. It's like between, it's like 1,000 terahash per second. And you can get an ASIC that does 1,000 terahash per second. I think that's one petahash. Anyways, in the future, you're going to be able to get an ASIC that does 5 or maybe even 10 petahash per second, because the Bitcoin network hash rate is like on the order of exahashes or something. So you're going to be able to do maybe 10 petahash per second with an ASIC. So you have to adjust for that. But that's just that's baked into the formula.
Okay, so there is that kind of hard coding. Now, a couple of things that I have questions about that I can just see, like, I guess I should add, like, the reason I'm asking all this is because I'm sort of thinking ahead to, like, if we have an economy where goods are actually priced in Chi, then if things start going, like, if there end up being, like, hard-coded jumps in Chi, even if they're very well thought through, like, then that would do a lot to sort of, like, reduce any vendor's confidence in pricing their goods in Chi, which is like kind of the whole point of Chi. So that's that's just some context for where this is coming from. A couple of concerns about what you like to that end, like concerning what you said. So, first of all, what if there are you guys just assuming the same increase in hash efficiency for SHA-256 and script as like is already assumed for a cop out? And then another thing too is um, if the relative shares, so you guys are starting out with like 3, 3, and 3, and my understanding is that that is something that is like that will be a hard coded thing ongoing. So like over time, you guys will like it'll go more and more to SHA until the point where like quainetwork just completely dwarfs like all the other networks. Like it'll become like what like 7 SHA, 2 script or something like that. Because there's 9 total. So I just lost my train of thought. But like on those changes, like when it changes the proportion of workshares that are allowed to be from the different algorithms, will that potentially cause like instability, or will it just be based on the same figure that you're hard coding from the start?
Yeah, the number of hashes per chi will always remain the same regardless of, the difficulty per share or the number of shares or the block time or any of these other variables. Those are all independent. So the K chi number, which is the number of hashes per chi, is an independent variable. It varies over time and it is set for each algorithm. So it's going to be different for SHA and script and Kapow. There are going to be different numbers. And if we ever add, another algorithm like, I don't know, Zcash or some Equihash, or if we add Ethereum Classic or whatever it is, we're gonna have to set separate numbers for those. And to answer your first question, yeah, we're gonna set it so that it changes at the same rate as Kapow. Until we have like a really good reason as to why it doesn't have the same efficiency gains over time, we're gonna use that because generally like computer efficiency gains are generally the same over time.
And my understanding is that is like assuming a 2x increase in efficiency every approximately 2.5 years up until the year 2030. Is that right? And then it stops after that.
Yeah, that sounds right.
I want to also highlight something else you mentioned. You called out the shares per hash. And I think you stated that that was hard coded. Jonathan, it's my understanding that that's actually not hard coded. Is that correct?
The number of hashes per share is not hard coded. The number of hashes per chi will be hard coded, to my understanding.
Sorry, I might have misspoke. I was referring to the number of shares per algorithm.
Yeah,
that's also not. I mean, it starts at 3, but I mean, there's a controller that can adjust it. Now, I didn't design the controller, so I can't speak to it too much, but I know that it will change.
Okay.
Oh, so it self-adjusts.
Yeah, there's a controller that changes the number of shares per algorithm. Yeah.
Okay, Noah posted something interesting. He said those efficiency gains are lies. That's kind of an extreme statement, but I'm curious, or I guess Noah, maybe you can clarify. But
I think if you just look at historically, we've gotten more efficient GPUs every year. We got more efficient ASICs every year. That's just historically. I mean, you can say that won't happen in the future. I'd like to hear the argument, I guess, but I mean, historically they definitely have become more efficient. They're becoming less efficient over time now. That's fair.
Well, yeah, it's like you can only scale down like deterministic computing so far.
Right, yeah. I mean, GPUs are at like what 5 nanometers now or something. It's very small, so the efficiency gains are going to be modest, I would say.
Yeah. I think like for some reason something's still not clicking, and I think it's just like poor understanding still of the mechanism of SOAP. And like and again, I don't know the exact question to ask, but are you guys basically like I kind of had a breakthrough in understanding of SOAP like a little bit. It was like a couple 2, 3, or 4 QUAI Fridays ago where it was I forget, I think it was Dr. K or something, and it was explained as like that there's like a competitive market for miners to like there's a sort of like a fixed amount of QUAI and Qi that you guys are allowing to be emitted via SOAP, and then there's a competitive market for miners to take all of that, and then on the side of the stakers, there's like a competitive market for like the amount of stake. But like, is it like could you say that SOAP is basically like you're taking so I guess like question part one would be like, so the quainetwork is like the way that it used to be before SOAP is still like fully functional and not dependent on SOAP, right? Like that still operates. Like if you wanted to just ignore SOAP, you could just like participate as a miner and as a QUAI holder with the underlying network. And even if like SOAP got completely deleted, like that would still all be the same, right?
Yes.
Okay. And then SOAP is like on top of that. And would it be accurate to say that SOAP is basically just like allowing up to a certain amount of workshares per block to be from different algorithms? Would that be like
Yeah.
SOAP in a nutshell?
Well, I mean, it's sort of, but like, the Coinbase points to the QUAI Foundation, or the Coinbase is owned, I would say, by the QUAI Foundation. So, I mean, that's the main difference. But otherwise, yeah, I mean, SOAP just allows other algorithms to make work shares for QUAI. They can't make blocks yet, so that's like a more complicated, design. But I mean, Kapow makes blocks, but SHA and Script and any other, algorithms that we add in the future, under our current understanding, will not be able to make blocks. They will make work shares, which still contribute to security of the network. And that is, the work share design, and we can go into that, security wise. But yeah, I mean, basically just allows other algorithms to participate in work share production. But importantly, though, in our, version of SOAP, I guess you could say, it requires Coinbases to be owned by the QUAI Foundation. That means when you construct a block, you must include a Coinbase that pays out to the QUAI Foundation, which is then used for buybacks. That's like a very important part of it, because that's one of the reasons we undertook the whole thing. I mean, it's an economic gain. It's a security improvement, but it's also an economic improvement to the protocol and the tokenomics.
And the way that that's enforced is that it has to be a template that's signed by the three like master keys or whatever that you guys have. I believe that was
So basically, every node will have like a default template it can mine on, and that default template is probably going to be like out of date and whatever. But if you mine on the default template, you get paid, I think, 5% less. And if you mine on the new templates, which are the ones that are signed and have all the fields filled out, like the previous block from the parent chain, and like the difficulty numbers and all the header fields and the Coinbase and all this stuff. If you mine on that block template, you'll get 100% of the QUAI reward or Chi reward, depending on what you choose. But if you mine on an old or a default template that's set in the node by itself, if you decide like I don't want to pay the foundation or whatever, like you can still do that, but you will be paid 5% less.
Okay, and so sorry, part of the reason I'm going to go through this is because I feel like maybe it would be helpful for other people. So I hope that there would be. In the past, I've had the experience that like when I'm confused about something, usually other people are too. So hopefully that's the case. So you're basically, do all QUAI blocks like deterministically have 9 workshares, or is it like up to 9 workshares?
They can have up to, I believe it's 16 at the max. But
really? Oh.
Yeah, but it's interesting because we did set 3 per block per algo. So I remember it being 16. Maybe we've lowered it because the 3, obviously 3 by 3 is 9. So previously there was a max of 16. So it's possible we reduced it to 9. I'd have to look into the code to see for sure.
Okay, but then definitely for SOAP, you're using like there's a maximum of 9 that are coming from the external like algorithms, but it's not necessarily like it doesn't mean that every single block is going to have like exactly 3 of each, but it means that you can accept up to 3 of each.
Correct.
As well as like just the normal ProgPow, soon to be CawPow, like shares.
Kapow gets 3.
Okay.
Kapow gets 3. SHA gets 3. Script gets 3. Like that.
But isn't that CawPow like through SOAP? or is it?
It's the same.
Oh, okay.
So all
Okay.
Kapow is through SOAP now. I mean, it's all going to be SOAP. All of it. Every mined block, every share, everything will have the header that has the Coinbase that pays out to the QUAI Foundation.
Yeah. And the reason why, Gabriel, is just because miners won't want to forgo that 5%.
Oh yeah, they can choose not to. They will just forego 5%. Yeah.
Okay, if they just like mine ProgPow, soon to be Copow, and don't like participate in SOAP.
Pretty much, yeah.
Okay, so what proportion? Like, I guess out of curiosity, like the so we really are like changing the like our underlying algorithm is now going to be like a combination of algorithms. Do you expect um will it go more toward Copow over time? Like especially if it starts to reach a point where the total hash power of like QUAI as a whole is like starting to surpass that of Bitcoin. Like, will we go back more to Copow? Because like obviously, like one of the things that Dr. Chase talked about in the past was like the ASIC, like geopolitical risk with ASICs of like a government restricting like imports of them or something. So if we become more dependent in the long run on that, like, or I guess yeah.
I would say, at the point at which we overtake Bitcoin, we're probably getting enough transaction volume to pay for the block rewards. So it's probably, a good time to end the SOAP program at that point. But if we were ever to go back to Kapow or ProgPow, only, we would have to basically eliminate SOAP because the rewards from Ravencoin wouldn't even be close to enough to, make it even worthwhile. I don't think you'd have to basically get the reward from inflation and from transaction fees. Transaction fees should make up the majority of the block reward if we scale to meet the the throughput that we're expecting, global commerce and all that. If you meet Bitcoin's transaction volume and then obviously you exceed it, like you would get transaction fees enough to pay a lot of the block subsidy, but we would still have to pay block subsidy out of the protocol instead of having it covered by SOAP in that case.
Oh wait, can you say that one more time? Sorry, or just the last part.
So we would have to end the SOAP program if we ever were to switch back to Kapow only.
Okay, but will like just by the nature of you said that you haven't worked on the code for the controller, but will it like increase the proportion to Copow like more as it grows or
Yeah. It'll actually switch it more to SHA because SHA is more profitable. It has this ability to switch the number of shares to what is more profitable, basically. And he uses some complicated difficulty measurement to do that. But basically, the more hash rate we get from SHA, well, actually, there's like this ability for the controller to determine when we've surpassed Kapow's subsidy. So that's like I think it's like $30,000 a day or something. And so once we've surpassed that, it will start adding more SHA shares to the block and reduce the number of Kapow shares per block, which means that we'll have more SHA hash rate, or we'll have more energy units contributed to the chain from SHA than from Kapow or Script, because SHA will have a higher block subsidy ceiling, so to speak. Kapow has a very low block subsidy ceiling. It's only 30K per day. Once we exceed that, we're going to have to lower the number of shares that are allocated to Kapow, and increase the number of shares allocated to SHA so that more of the energy being, expended in the network, it comes from SHA. That's just because we've expanded past the block subsidy of Kapow.
Okay. Well, thank you so much for answering my questions. I'm just on an ongoing journey to like understand all of this more. Cool. Thank you.
Yeah, great questions, Gabriel. Rock and roll, guys. Yeah, great questions, Gabriel. Thanks for coming up and asking. It's kicking off quite an interesting chat down below. So tip of the hat to you guys for engaging along the way. Again, folks, if you're listening in on X, we are simulcasting from Discord. I'm going to move on to another hot topic. Noah and the community is kind of been going ham on the QUAI bot and diving into the exchange rate that's baked into the protocol here. And they have some questions they're seeking clarification on. So to start, let's go with number one here. Question is, when the protocol references an exchange rate for reward calculations, where exactly does that value come from? Is it purely market driven, or is there any normalization or weighting applied before the protocol uses it?
The exchange rate is defined by the controller, the QUAI QI controller, which is in the code base already. That is what determines the exchange rate, and that is based on hash rate. It's based on difficulty, and it is based on conversions between QUAI and QI. And it's to some degree based on minor choice as well, I think. But it's a majority on conversion volume and hash rate and difficulty.
Cool. Rock on. Yeah, Noah, I don't think I've followed up with you, but I was wondering if you took some time to look at our docs here. I'm gonna repaste it down below. Hopefully this helps, but if you've already taken a look at it, just let me know. I'm gonna move on to the next question here, and this is kind of where I start to get a little confused. But question states, can you explain the difference between the exchange rate the market sees and the conversion rate used by the protocol? Are these two values related in a deterministic way? My initial thought here is we might have to define the market, but does that question make sense to you, Jonathan?
I mean, those numbers are the same. The exchange rate and the conversion rate are the same. Now, the number you get in the end is also determined by the conversion flow amount. That's basically the slippage. So, like, based on the current conversion flow, a certain slippage is applied. If the conversion flow is higher, you get a lower slippage per unit of QUAI. If the conversion rate is, or conversion flow is 0, you get a much higher slippage per unit QUAI. This is all, baked into the controller, but the conversion rate and the exchange rate are like the same. Like those are terms used interchangeably. I don't really know what the question is really asking, because I think they're the same.
Okay, got it. Noah, Keyshort, feel free to expand on that one. I'm going to move on to the next one here. Let's see here. It says, would it make sense to explicitly differentiate or name the type of exchange rate the system expects so it's clear whether it's referring to QUSD, QUAI, or something else, or is the naming intentionally broad? Guys, you're gonna have to point probably to where you're looking here. I think that might help.
Yeah, that's fair. Like, we could probably do better at naming. This was written, to be clear to us, but I guess, may not be clear to other people looking at the code. So I guess naming is probably something that could be improved. I would agree with that. I think there's some refactoring that could be done, some comments that could be improved. The PR that we have open, I think, improves some of the things in here maybe, but it also adds a lot of new logic. So obviously there's more complexity actually. But yeah, to improve understanding by third-party developers, we probably could improve some of the naming.
Okay. Yeah, fair. Noah's adding some context here. He's referring to exchange rate and QI to QUAI and QUAI to QI. Okay, I think those are API endpoints he's referring to.
Right. Yeah, QI to QUAI is an API endpoint. QUAI to QI, yeah, those are API endpoints. They use the exchange rate in the block.
Got it. Okay. Hopefully that helps, folks. Again, feel free to follow up. The next one here pivots slightly. Question is, will the reward math from difficulty to workshares to final payouts be documented in a simple, high-level way? A lot of people want an easy explanation without needing to look through code.
Yeah. Actually, I'm going to make an API endpoint that gives you the reward per workshare or reward per hash or something like that to make it easier for people. We're also going to be giving that to a third-party data provider for miners. So yeah, there's going to be an API endpoint that hopefully makes that a lot easier, so that you don't have to look at code. You can just kind of, say, what's my expected reward per workshare? What's my expected reward per hash? Like those kinds of things should just be, available. So I'm going to make that.
Awesome. Yeah. Okay. Yeah. Good call, guys. Great questions. All right. Last one here in this blog. Internally, does the protocol treat the exchange rate as cheese market value or QUAIs?
It's QUAI's market value. I think it's I mean, it's cheap for QUAI, but it defines QUAI's market value kind of because Chi's market value is determined by the K Chi, the number of hashes per Chi.
Right.
So I would say K QUAI or the exchange rate is kind of like QUAI's market value. That's more like how you would look at it, but I think it actually literally is the number of Chi per QUAI or something like that. I think.
Okay. Okay. I remember. Uh, yeah. Okay. I remember that being documented somewhere. I think it's in that conversion document, either that or token dynamics. So maybe I can take that up later. But great questions, guys. I have a lot of fun watching y'all engage, especially in the developer Discord server. For those of you tuning in, if you did not know, we have a dedicated Discord server just for developers. So I'm going to drop a link to that in chat now. Rock on. Okay, yeah. It seems like a lot of discussions just kind of surround those semantics. So appreciate you taking those questions, Jonathan. We got a few more coming in through here now. Some questions from outside of the server collected by Kishore here. First one is, with SOAP coming in, what kind of miner behavior do we expect to change the most? What's the practical difference miners will feel according to you?
I would expect a lot more hash rate, honestly, overall, because we're increasing the reward. So like the overall like reward per block, the overall reward per work share. I mean, we're going to expect a lot more hash rate as a result. I mean, from all three algorithms, but also from Kapal. I think you're going to see like a 10x increase in Kapal hash rate probably. So that's the first thing I would expect to happen.
Dang. Okay. That's a good question, guys. Next one here, from a network health perspective, what's the minimum hash participation needed for SOAP to remain economically self-sustaining without depending on constant new demand?
I mean, ideally the minimum we get is based on the reward we give. So if it's a 1-to-1, I mean, that would be perfect. I don't have like a minimum because anything below a 1-to-1 means we're at net negative, which is bad. But that also means that the market is irrational and ignoring, an increase in profitability for whatever reason. So I don't think that's going to happen just because, a rational miner would choose, to mine QUAI if it's more profitable for them to do so. Bitcoin miners might choose not to, I guess, but we'd expect most rational miners to do so. So I don't think that's going to happen, but yeah, I don't have like a minimum. It would just be like, ideally we get, the number of hashes per unit energy per dollar that matches the number of dollars we're giving out, so to speak.
Yeah, no, that makes sense, Jonathan. I'm rereading the second half of this question here, and I have some thoughts, but I think they're referring to user demand. So it says, from a network health perspective, what's the minimum hash participation needed for SOAP to remain economically self-sustaining without depending on constant new demand? So when I think of new demand, I immediately think of users collecting tokens. But does that make sense to you, Jonathan?
I mean, it is self-sustaining in that case without any new demand.
Yeah,
Mindful.
that was my initial thought, but okay, thanks for clarifying. Yes, because with that 1-to-1, we're basically sustainable in terms of rewarding miners and paying for that hash rate.
Yeah, and it's not constant new demand. I mean, all we would need is demand that matches, hash rate that matches the output that we give. So if we give $100, we get $100 hash. I mean, that's what we need. But if you're talking about new demand in terms of people buying the token, it's self-sustaining without any people buying the token.
Cool. Yeah, that's what I wanted to key in there. Okay, glad I'm thinking about this correctly. All right, rock on. Moving right along here. Does SOAP strengthen the network's resistance to short-range reorg attempts, or does it mainly address long-term sell pressure? I think it addresses both.
Yeah, I would say both. Long-term sell pressure, I don't really know what that means because sell pressure is kind of instantaneous. It comes and goes. But yeah, I mean, it's both. If you think about long-term sell pressure in terms of like inflation, obviously it's helpful for that. And then, people attacking the network, it's helpful because they need a combination of different mining machines, so to speak. So, yeah, it makes it more difficult because you have to obtain all of them. You have to obtain a majority of all of them. Makes it more difficult to do.
Okay. All right. Let's see here. Is SOAP planned as a one-shot activation or a phased rollout with progressive checks? Oh, that's a good question.
Right now it's a one-shot activation. We might delay staking for a few days if we have to like get an audit done on the contract. But that's not part of the actual protocol. The SOAP protocol, works with or without the staking contract enabled because all it does is allow us to buy back QUAI. We can choose to burn it or choose to give it to stakers. But either way, the net influence is still positive because you're buying QUAI off market and then removing it from the market. So, there's no like phased rollout from that perspective, but we might have a phased rollout for staking. I can't really say yet because we haven't we haven't gotten to the point where we're testing the staking contract on the Orchard testnet, so we'll be doing that this week probably actually. But that's just that's to come. I think we're also probably going to have another algorithm that's added later down the line, but I can't say what it is right now because I don't know. But we're looking at other ones that are more profitable like Zcash, but Zcash a few months from now could be not profitable anymore. Because who knows where it's gonna go. So I think right now we're just gonna stick with these three. But if we do add another one, I mean that's gonna be later down the line.
Right. Yeah, I like thinking about this as a huge activation that just opens up so many additional opportunities. So depending on how you define SOAP, once it's live, I expect a lot of new cool things to be coming to quainetwork. So. Great answer. Appreciate the questions, guys. Moving right along, we have what will be the most noticeable change miners experience the day SOAP activates? Can I say profitability? NFA.
Yeah, profitability will go up.
Nice. Easy one. Nice and easy. And then they should keep their eyes peeled for staking opportunities once they get their hands on some QUAI. Nice. Any observations that surprised you during internal testing? I know Dr. K has had a few. What about you, Jonathan?
I think just the complexity of these ASICs is quite high, and they're black boxes, right? They're not open source. Most of them are not, at least. The Bitmain ones are not. The Bitaxes are kind of open source, but the Bitmain machines are not. So understanding what goes wrong is difficult because they don't really give you a lot of good information. Like there's a Stratum protocol, right? But there's not just the Stratum protocol. There's like the protocol that the ASIC machine itself runs. The software that it runs is different from machine to machine. So trying to debug that was more difficult than I anticipated. I thought they would all be kind of the same. I thought they'd all follow the same kind of protocol, but no, they're all a little bit different. So that means running a mining pool is a little bit more complicated than I thought, but I'm not a mining pool operator, luckily. I don't have to deal with that too much, but we were, obviously building out, an example implementation of a mining pool with SOAP integrated, for other mining pools to copy. But I'm sure, those other mining pools have dealt with problems with ASICs before, so it's not like a huge deal, but, it is something that, we did have to strangle with a little bit.
Interesting observation. I'll just remind the audience, Dr. K had a rant previously on ASIC boost. That was one of the things he thought was super interesting when he was diving into this.
Yeah, that's also pretty interesting. That's just like a way for ASICs to become a little faster, a little more efficient on SHA. It's just for Bitcoin, not for scripts, but it is pretty interesting. Yeah. The whole thing about how to build a mining machine for SHA is also pretty interesting. Like the design for an ASIC design is pretty interesting. But it unfortunately, the whole thing is very closed source. Like meaning, if you want to understand what Bitmain is doing in these machines, like you kind of have to hack into it. And like even then, it's not very clear what's going on. Like you can install custom firmware on your Bitmain ASIC, right? But that custom firmware also doesn't always work. It also has like its own bugs, especially if you're using like old hardware like I am. Like it's all outdated. You know, it has bugs that have never been fixed because the new version is like the only one people use. So yeah, I mean, it is a little bit difficult to grapple with.
Nice, nice. Great questions, guys. Just a quick check-in over on X. We do these every Monday. So if you guys have a question, feel free to check the pinned link up above and join in here on Discord. These events are simulcasted from Discord. But here in a second, I will actually go and check the comments section for questions. If you guys have any, feel free to drop them in the comments if you can't make it over to Discord. Rock on. All right, last one in this block, Jonathan. Will explorers and nodes show extra information once SOAP is live, like subsidy amounts, etc.?
Yeah, we are working on that. We have a dashboard, a SOAP dashboard built out that will display all of the subsidy blocks that are mined and the total, net revenue and the 24-hour rolling revenue. So that obviously will give you information about how much, revenue is incoming from the subsidy chains, and then we're also going to update the Explorer to have some information on that as well. That we'll have out by the time it launches.
Rock on, rock on. Yeah, we teased it a little bit in the last QUAI Friday. It's pretty fun to watch some of the rewards come in. So get ready, folks. It's coming. It's right around the corner now, and I think everybody will enjoy like all the new tools and opportunities now with Project SOAP. Rock on. All right, moving right along here, going back to some normal builder questions. Lord 4T6 is asking about our MDK. Oh man, diving deep here. Okay, so he says the MDK uses React Native and quays.js for protobuf encoding. How can I implement QUAI transactions in native Kotlin/Android without JavaScript? Oh, that's a good question.
Yeah, I mean, you're going to have to write a protobuf parser and decoder, I guess. We don't have an SDK in Java, so you can kind of copy the code. I mean, I'm sure AI can do a good job too these days. You give it some code, it'll just be like, okay, I'll write this in Java. It's not too complicated for AI to do that. It's pretty good at transpiling or copying code from one language to another. So that's what I'd recommend, honestly. But yeah, you are going to have to rewrite it in Java just because we don't have any code written in Java for QUAI.
Yeah, good call out too, for having AI take a crack at it. He references Kotlin, which is a version of Java, which is not JavaScript. So tip of the hat to Lord 4Tango6 for trying to build something for an Android phone. That sounds pretty cool. Out of curiosity, Jonathan, protobuf encoding seems to be a hurdle for some of the developers who come here to quainetwork. What libraries out there are you currently aware of that people might be able to reference?
I'm not aware of them in Java because we don't use Java like at all, pretty much. So I'm not really sure about Java, but like Go has a really good protobuf package. Like Google has a protobuf package that we use. I think Google probably invented protobuf, honestly. And then in JavaScript, there's a library too that is used in our SDK. But other than that, I'm not really aware of any.
Okay. All right. Well, Go has got a reference implementation for us. Quays leverages a JavaScript library.
There's also an implementation in C++, but that doesn't use a library. I wrote it for Ledger. The Ledger app has a protobuf parser, and you can look at that if you want, but that's not a library. I mean, you can try to copy the code, but it's not a real library.
Got it. Okay. Another open source opportunity here. Rock on, guys. Great questions. Okay, coming up on time, we got a few more. First one here from Kishore. Could donor pools accidentally construct Coinbases that fail Q address inclusion? How do we prevent this from stalling inclusion?
I mean, it's pretty simple. If you don't put a QUAI address in your block, you're not going to get the reward.
Okay.
You know?
All right.
I mean, it's like if you don't put the QUAI Coinbase in the subsidy block, like the QUAI Foundation Coinbase, like that's going to fail because the signature verification is going to fail. There's a bunch of verification that's done in the node on the block. So if you put the wrong address in, you'll fail verification. If you put the wrong QUAI address, I mean, if you don't put a QUAI address, I think it will actually fail. Like the block you produce is now like thrown away. So you lost your reward basically. If you put the wrong QUAI address, I mean, you also lost your reward because it's somebody else's now. So I don't really know what to tell you. Just put the right address in, right, when you're constructing the block. If you don't, you lose your reward.
Okay. I think that the concern there might have been, Kishore, correct me if I'm wrong, is donor pools accidentally messing up the block creation here. But it sounds like that's not necessarily a risk as long as they're following our spec, right?
If they follow the reference implementation, they won't have any problems.
Right. Okay. Rock and roll. Next one here. I didn't see any questions on X, by the way. So I see a number of folks requesting to speak. Come back on Tuesday. Tuesday is our community space. But if you have a question, feel free to drop it in the comments section. All right, moving right along. Kishore is asking, we can notice the way shares are validated is more structured now. How does the node decide whether a share is quote unquote good enough to count towards subsidy, and what makes a share get rejected?
All based on difficulty and target. If it meets the target, if it meets the difficulty, it's a valid block, valid work share. If it doesn't meet the difficulty or the target, which are interchangeable terms, it's not a valid share.
Okay, cool. Rock and roll. Easy enough. At time now, I got one more coming through here. I'm checking for comments on X. I'm not seeing any, but if a miner's clock is slightly off, can that cause a share to be discarded as non-live? How strict is the timestamp check?
Yeah, maybe. I mean, it's not, it's a signature thing. I mean, it has to be a valid signature. It's not something that, the node's clock would, reject it based on the timestamp. It's based on the signature and it's based on the time in the signature. But yeah, I mean, you want to have your clock like kind of synced. I mean, that's important, I'd say. Something to consider. But yeah, I mean, it's not something that would, cause the node to get desynced from the network or something like that.
Got it. Okay. What do we use? And as miners, is it just network time protocol and NTP?
Yeah, I think that NTP server is probably good to use, but I mean, the block timing has a similar rule, right? You can't have a block timestamp that is too far off what you think it should be, right?
Right.
There's some tolerance, obviously, you can be a few seconds off, but there's a requirement, right? So your node has to be generally on the same time as everybody else. Plus minus a few seconds is fine. But if you receive a block with a timestamp in it that is too far off, you'll reject that block. So it is important to get your time, relatively synced. But if it's a little bit off, it's probably fine. But yeah, I mean, this is required for anything, internet SSL requires you to have a proper timestamp. If your clock is off, you won't be able to browse the web actually because SSL will fail to verify. So it's kind of the same thing with the blocks as well. And also, obviously the same thing with these templates as well.
Got it. All right. Well, a lot of verification going into that. The community is obviously diving deep into everything you guys got building over here. We are over time now. I don't see any more questions on X. So you guys missed your opportunity. But come back next Monday. Join us on Discord. And if we see you hanging out here on Discord on Mondays or Wednesdays with Dr. K, feel free to request to speak. Every Tuesday is our community space. But this has been a great conversation. A lot of builders showing up, building some cool stuff. We got some researchers diving deep. Shout out Noah, Kishore, Gabriel. It's a journey, and I can't, admire you guys enough for all the effort and energy you're putting into this. Lots of opportunities coming for everybody. in blockchain, whether you're user, builder, miner, node operator, investor, staker, trader, you name it. SOAP's unlocking a whole lot of opportunities, as if quainetwork didn't already have a crap ton. So, you guys have been burning the midnight oil. I can't appreciate you enough, Jonathan, for joining us today. We'll get, Shrikara, here on this space as soon as he's got some time. But thanks for tuning in, everybody. Thank you so much, Jonathan, for joining us today. The community can't appreciate it enough, even with all of the work that we're doing day and night over here at quainetwork. So hopefully you got a little bit of a break and enjoyed some football over the weekend. But we're back here today, and we're gonna get after it, folks. QUAI and Project Soap is right around the corner. Anything you wanted to share or any final thoughts, Jonathan, before I wrap it up?
No, thank you guys for the questions. Thanks for tuning in. Hopefully next week we'll get Shakara on so you can ask him some more in-depth questions. But other than that, thank you guys, and we'll see you later.
Yeah. Many appreciations for everybody asking questions around here. If you want even more in-depth questions answered, definitely join us on Wednesday. We'll get Dr. K up here, who's also burning the midnight oil, and we'll give you guys an opportunity to ask him a ton of questions as well. That space is always fun. This one is always a great start to the week. Again, can't thank everybody enough for tuning in. If you're new around here and you're joining us on X, hop in to the Discord. These events are simulcasted from Discord. Tomorrow will be 100% on X, and then Wednesday back simulcasted from Discord with Dr. K. So join the Discord server, join QUAI Nation. You need one QUAI in your Pelagus wallet to join QUAI Nation and get that role. You don't need QUAI Nation to join these chats though, so it's open season around here. And if you're looking for where to get some QUAI, the easiest way to do so is to go sign up for Kipper Money. And then the community will obviously engage with you there. If you're hanging out with us here on X, it's a great way to earn some QUAI. Super fast, super easy. Again, you get some QUAI just for signing up. If you need even more, we are actively traded on Mexi, Gate.io, and LBank. You can swap your useless tokens for more useful ones at SwapSpace, and let's exchange and get ready for Project Soap, guys. Follow the quainetwork account and stay tuned. We got a lot of updates coming. I just got out of the stand-up with the team. A lot of activations coming down the pipe, guys, so keep your eyes peeled. We're going to have a ton of more content for you guys to dive into. Again, thanks, Jonathan, for tuning in. We go live on Tuesdays and Thursdays. We have the community space on Tuesdays. Dr. K's Tech AMA on Wednesdays, and QUAI Friday every Friday. So tons of opportunities to tune in, hear from the team, and engage with us. So happy Monday, everybody. Hope everybody had an amazing week. Really look forward to talking to the community more tomorrow. And with that, I'll call it. Thanks, Jonathan. Thanks, everybody. Really appreciate y'all tuning in.